So let's talk about the banking industry, and let's narrow it down to small business and commercial lending and leasing in the banking industry. The idea there is that you have small and medium enterprises that are whose lifeline and lifeblood is about having working capital so that they can order their raw material, is about making sure that their equipment is refurbished and they buy new equipment, and therefore the financing of that equipment. And in the middle of that is a finance transaction where a bank is getting ready to actually approve that customer to actually fund that transaction. Typically today, that could take 20 days. That's not being adaptive, instinctive, and predictive. But you bring AI into that situation, and then you can really think about a deep connection between the information that small and medium enterprise is providing or is expected to provide to the bank. And then on the spot, using AI as the engine, being able to understand the financial wherewithal of that small business, being able to understand the balance sheet and P&L and the cash flow, then to use predictive algorithms and machine learning to predict where that's going to go for that industry and for that customer over the next many years. And then saying, therefore, customer, you're approved for $1 million line, and that whole thing takes 30 minutes. The ability to actually connect, predict, and then adapt to get that answer to the customer in that 30 minutes versus 3 weeks means that the customer is able to keep their manufacturing going, keep their supply chain going, keep their working capital going in order to be able to produce more. Think about the impact on that customer. But let's broaden out now. Think about the impact on the economy. Think about what it does to the US economy when you have a number of those small businesses that are thriving. You can drive significant impact on GDP, and therefore you can impact society a lot.